Welcome back to Daily Wall Street. Today is Tuesday, March 25th, 2025, and we're diving into one big question. Is this market rebound the real deal, or just another bear trap? Tesla surged another 12% yesterday, leading a broad-based rally across the U.S. markets. Much of this optimism came after Trump hinted at a more flexible tariff policy. This policy shift eased fears of a trade war, boosting investor sentiment. Markets are now pricing in a lower likelihood of disruptive tariffs, especially in sectors like autos, chips, and healthcare. The U.S. manufacturing PMI fell to 49.8 in March, below both expectations and last month's reading. Hiring also contracted, for the first time since October, and input costs surged to a 30-month high. Businesses are growing cautious, and confidence in future activity continues to decline. Atlanta Fed President Raphael Bostic warned that expectations for 2 rate cuts this year may be too optimistic. He also lowered GDP growth projections, citing Trump's unpredictable policy swings. The Fed remains in wait-and-see mode, focused on economic stability over stimulus. The 2-year Treasury yield climbed from 3.96% to 4.04%, while the 10-year jumped from 4.26% to 4.35%. Pushing the TLT ETF down 1% on the day. But there's a twist. Analysts now talk about the Besenet Put. Treasury Secretary Besenet is subtly supporting the bond market through reduced long-duration issuance and policy tools like SLR easing to encourage banks to hold more treasuries. Major banks have revised down their year-end 10-year yield forecasts. RBC to 4.2%, Barclays to 4.0%, and SocGen as low as 3.8%. There's growing confidence the Treasury intends to stabilize long-term rates. Gold prices have pulled back in recent days, while the dollar rebounded slightly. Still, many institutional analysts have turned bearish on the dollar in the long term. A weakening dollar could support U.S. exports, commodity prices, and overseas earnings, especially for tech giants with significant international exposure. Speaking of tech, big names like Nvidia jumped 3.2%, Apple 1.1%, and Microsoft 0.5%. The market breadth was the strongest it's been in weeks. Tesla's 12% rally wasn't just short covering. The company is reportedly rolling out its advanced self-driving system in China and the EU this year, a major catalyst. Still, competition in China is heating up. BYD posted record Q4 earnings with 73% YoY net profit growth. Their rapid innovation and aggressive pricing are challenging Tesla's dominance. Tesla's market share in China is stagnating, while BYD's share has surged from nearly 0 in 2017 to around 15% in 2025. Investors are closely watching Tesla's upcoming Q1 sales numbers, due April 2. If sales disappoint again, bearish sentiment could return. In summary, optimism is back, for now. Use this rally to tighten your stop losses, reassess exposure, and prepare for volatility. Thanks for watching Daily Wall Street.